All right, welcome back to Talk Tickers. Today, we're diving headfirst into FlyWire's Q3 2024 earnings call.
Oh, yeah, you sent over the transcript and some stock info earlier.
And let me tell you,
Some interesting stuff.
things are getting interesting over at FlyWire HQ.
Well, you know FlyWire, they're the global payments kind of wizards.
Yeah.
Really focused on education, healthcare, travel, and B2B.
Exactly. And it's that specialization that sets them apart. And it seems to be working.
Yeah.
Their revenue, less ancillary services, hit $151.4 million this quarter.
Wow.
That's a jump of almost 30% year over year.
Huge.
And hold on to your hats, because they're predicting they'll double their revenue again in the next few years.
Ambitious, sure. But, if you look at their track record, it actually seems doable.
Yeah.
This consistent growth, even with some bumps in the road, really shows they know what they're doing.
Okay, let's unpack this bumps in the road thing.
Right.
One of the big takeaways from this call is the situation in Canada and Australia.
Oh, yeah.
They're seeing these restrictions on foreign students,
Right.
which is putting a dent in their education sector.
Of course.
And it sounds like Canada, in particular, is a bit of a headache.
Yeah, that's the Canadian conundrum they talked about on the call.
Right.
Even though FlyWire is spreading its wings into different industries, these regulatory changes in their core education business could really sting.
So how bad is it in Canada?
Well,
And what's FlyWire's plan to deal with it?
it doesn't look like things are going to kind of bounce back quickly.
Oh, no.
They're actually predicting pretty flat revenue for 2025 in Canada.
Ouch.
Yeah.
But they're not just, throwing in the towel, are they?
Right. They're being realistic.
Yeah.
Instead of bailing, they're doubling down on what they can control.
Yeah.
Building stronger relationships with their existing Canadian clients, winning over new institutions,
Right.
and expanding what they offer in that market.
Smart move.
Yeah.
Let's shift gears now and talk about the good stuff.
All right, let's do it.
Because FlyWire had plenty of wins this quarter.
Yeah.
Despite those Canadian woes, their education business is booming in the US and the UK.
Right.
And they're even seeing strong growth in some up-and-coming education markets.
That's the beauty of diversification, not putting all your eggs in one basket, right?
Yeah.
FlyWire is strategically building a business that can roll with the punches.
And it's not just about geography.
Right.
They're also winning by expanding what they offer within existing markets. Like in the US, their full suite solution for student financial services is a hit.
Okay.
This goes beyond just handling international payments.
Yeah.
They're helping institutions manage everything.
Wow.
Billing, payment plans, even collections.
The whole 9 yards.
Yeah.
That full suite approach is a game changer.
Yeah.
FlyWire's not just another vendor.
Right.
They're becoming a true partner,
Right.
which makes their client relationships much stickier.
Speaking of sticky, they snagged a huge GE new client in the US. One of the biggest private art and design schools in the country.
Nice.
Just signed up for the full suite.
Awesome.
And get this.
Yeah.
They'd been using FlyWire for cross-border payments since 2014.
Okay.
So it's a real testament to FlyWire's ability to build trust and then expand over time.
Absolutely.
Now let's move beyond education.
Okay.
FlyWire's making serious waves in the travel industry too.
Yeah.
They're winning over new clients left and right,
Really?
even taking customers away from their direct competitors.
Wow.
Sounds like their travel business is taking off.
It does.
What's their secret sauce?
Well, they've got this travel-specific expertise.
Oh.
They're integrating deeply with their clients' existing systems,
Huh?
and they're known for their awesome customer support.
Yeah.
That's a powerful combination.
They gave a great example with Ansova Travel,
Yeah.
a luxury travel company in Vietnam.
Okay.
Ansova was looking for a company with travel expertise and a dedicated support team.
Yeah.
Sounds like FlyWire blew them away
Really?
because they were using the platform way more than expected
Wow.
right out of the gate.
And that's exactly what FlyWire is going for. They're not trying to be everything to everyone.
Right.
They pick a niche, become experts, and then dominate.
Another big win was Karma Group,
Okay.
a luxury accommodations provider with properties all over Asia and Europe.
Got it.
They loved FlyWire's smooth workflows, their ERP integration, and the split payment option.
So it seems like FlyWire is attracting some, seriously big names in the travel space.
They are?
It really speaks to their growing reputation and their ability to handle the complex needs of major clients.
So far, we've covered education and travel.
Uh-huh.
Let's talk healthcare.
All right.
After a bit of a dip, this sector is back to modest growth.
Okay.
They talked about strengthening relationships with existing partners
Yeah.
and winning new clients, too.
Great.
A great example is Banner Health.
Oh, yeah. Banner Health. I've
Yeah.
heard of them.
Banner Health is using FlyWire for payments across all 30 plus of their locations.
Wow.
They even integrated affiliated practices onto the platform
Okay.
to make billing easier for patients.
Right. So everything's all in one place.
Yeah, this new integrated solution, Banner One, is pretty impressive.
Yeah.
Patients can see and pay all their bills in one place.
Makes things so much simpler.
And simpler's better, especially when it comes to healthcare bills.
Absolutely.
They mentioned that since implementing FlyWire's solution, Banner Health has already seen a 38% reduction in bad debt expense as a percentage of net revenue.
That's huge.
That's huge.
Yeah.
It really shows the financial benefits FlyWire can bring to healthcare providers.
Right.
More efficiency, less bad debt, everybody wins.
And everybody wins.
Now, let's tackle the last piece of the puzzle.
B2B.
B2B.
This sector is on fire for FlyWire, growing faster than any other part of their business organically.
That's really saying something considering how much the company is growing overall.
Yeah.
The B2B sector seems to be a major engine for FlyWire, and they're pouring fuel on that fire with their recent acquisition of Invoiced.
Right.
We're already seeing strong signs of integration and cross-selling,
Uh-huh.
and they even have their first client up and running on the combined platform.
The Invoice acquisition seems to be a home run.
Yeah.
It's expanding FlyWire's reach into B2B payments and giving them even more ways to grow.
And FlyWire isn't just going after any B2B company.
Right.
They're laser focused on specific niches within B2B.
Okay.
They think this targeted approach helps them become experts faster and win more deals.
It's interesting how this specialization strategy keeps popping up in every single one of FlyWire's verticals.
It is.
It's clearly a key part of their success because it lets them tailor their solutions to really nail their clients' needs.
They highlighted a win in the insurance sector with Redbridge,
Okay.
a reinsurance and consulting company.
Got it.
Redbridge is using FlyWire to offer a wide range of local payment options to their members and agents.
Excellent.
It's a perfect example of how FlyWire makes complex payments simple for global businesses.
Yeah, so we've covered a lot of ground here.
We have.
FlyWire is firing on all cylinders, even with those challenges in Canada and Australia.
Yeah.
Their diverse range of industries, their smart acquisitions, and their focus on efficiency are all incredibly positive signs.
Absolutely.
They're a company that's clearly executing well and showing strong financial performance.
Yep.
And that brings us to a key question.
Okay.
What are they doing with all that money they're making?
Well, stay tuned because in part 2, we'll be diving deep into FlyWire's financials and their strategy for spending and investing their cash.
Sounds good. Welcome back. Let's crack open FlyWire's financials and see what treasures we can unearth.
All right, let's talk money.
Yeah.
Looking at their balance sheet, FlyWire is sitting on a pretty impressive pile of cash.
Oh, yeah.
$721.5 million.
Wow.
To be exact, in cash, cash equivalents, and investments.
Okay.
And get this, they have zero debt.
That's a fantastic position to be in. It is.
It gives them so much flexibility
Yeah.
and opens up a world of options for future growth.
Right.
It also shows they're committed to managing their finances responsibly.
So the million-dollar question is,
Yeah.
what are they going to do with all that cash?
Right.
More acquisitions,
Yeah.
stock buybacks,
Uh-huh.
pump it back into the business.
Right.
What's the plan?
Well, they did repurchase 1.3 million shares for about $23 million during the quarter.
Okay.
That tells me they see their own stock as a good investment
Yeah.
and are willing to return some of that cash to shareholders.
Buybacks are always a good sign.
Definitely.
But what about acquisitions?
Yeah.
They've been pretty active on that front lately.
They mentioned they're still on the hunt for potential acquisitions,
Okay.
but they're being very picky.
Yeah.
They want companies that align with their technology vision,
Mm-hmm.
contribute to their growth,
Mm-hmm. and
and fit in culturally.
Well,
It has to be a win-win-win,
they're not just throwing money around.
which is good to see.
Yeah.
Their acquisition of Invoiced is a perfect example of their strategy in action.
Okay.
It ticked all their boxes and is already showing promising results.
It's a testament to their disciplined approach to M&A.
Yeah.
They're strategic, not impulsive, which is crucial for long-term success.
Let's zoom in on their revenue now.
Okay.
Transaction
Yeah.
revenue jumped by almost 29% year over year,
Nice.
fueled by growth in international education and travel.
Not a surprise there, given how well those sectors are performing.
Yeah.
Their core business is clearly thriving.
Platform and other revenue also saw a big jump,
Oh, yeah.
up 34.8% year over year.
Wow.
This is mainly from platform fees for software subscriptions
Right.
and usage-based fees.
This highlights the growing importance of their software solutions. They're not just processing payments anymore.
Right.
They're providing a whole suite of tools to manage complex financial workflows.
Their acquisition of StudyLink also contributed to this revenue growth, bringing in $1.8 million during the quarter.
StudyLink is another example of an acquisition that's kind of expanding their reach and capabilities,
Right.
helping them tap into new markets
Yeah.
and cement their position in the education sector.
And of course, we can't forget about Invoiced,
Right.
which contributed $0.9 million in revenue for the quarter.
It seems like the invoice integration is going smoothly,
Yeah.
and we're already seeing it impact the top line.
I bet
That
it-
bodes well for the future.
Now let's talk profits,
Yeah.
because at the end of the day, that's what really matters.
It is.
FlyWire's adjusted EBITDA, think of it as a measure of their core profitability from their operations, soared to $42.2 million in Q3.
Okay.
That's a massive increase of $14.7 million year over year.
Their profitability is seriously impressive. They're not just growing revenue.
Yeah.
They're turning that growth into cold, hard cash.
And their adjusted EBITDA margin, the percentage of revenue they keep as profit, expanded by nearly 430 basis points year over year.
Wow.
They're getting more efficient, squeezing more profit out of every dollar.
That focus on efficiency is a big part of their success.
Yeah.
It lets them invest in growth
Right.
while also delivering strong returns to shareholders.
Right.
It's like having your cake and eating it too.
They even raised their adjusted EBITDA outlook for the full year,
Oh, really?
now projecting a range of $76 million to $80 million.
Okay.
That's higher than their previous guidance.
This upward revision shows how confident they are in their ability to keep driving profitable growth.
Yeah.
They're exceeding expectations and delivering on their promises.
And here's a big one. FlyWire is also aiming for sustained GAAP net income profitability.
In plain English, that means they're focused on making real money, not just on paper.
Right.
It's a huge milestone for any company,
Yeah,
especially one that's still growing as fast as FlyWire.
absolutely.
They're achieving all of this while also investing heavily in their business.
Yeah.
They're pouring money into sales and marketing, technology development, and general administrative expenses.
It's a delicate balancing act, but they seem to have it down to a science.
Yeah.
They're investing for the future while still delivering strong profitability today.
Right.
That's the kind of strategic approach that sets them up for continued success for years to come.
Absolutely.
You mentioned FlyWire as a Rule of 40 company earlier.
Yeah.
What did that actually mean?
Yes. The Rule of 40. It's a key metric for software companies.
Okay.
And it basically measures whether a company is, striking a good balance between growth and profitability.
Okay.
To pass the test, you add your revenue growth rate to your profit margin.
Right.
If the sum is 40% or higher, you're in the Rule of 40 club.
Got it.
FlyWire seems very confident about staying in that club,
Okay.
which is a really positive sign.
So putting it all together, what should our listener be keeping an eye on when it comes to FlyWire's financials?
Well, one thing to watch is their capital allocation strategy.
Okay.
How are they going to deploy all that cash they're generating?
Right.
More buybacks, more acquisitions. Will they start paying dividends?
Yeah.
Those decisions will kind of tell us a lot about their priorities and their vision for the future.
Excellent point. What else should our listener be watching?
Keep an eye on their margins.
Okay.
Can they continue to improve their efficiency and profitability even as they invest heavily in growth?
Right.
That will be a key indicator of their long-term success.
Yeah.
And of course, we'll be watching closely to see if they can achieve that sustained GAAP net income profitability they're aiming for.
Right.
That would be a major accomplishment.
All in all, FlyWire's financials are looking very healthy.
They are.
Now, for the part I know you've all been waiting for,
Ooh, exciting.
the This Is Not Financial Advice segment.
Yeah.
All right, it's time for This Is Not Financial Advice,
Okay.
but here's a thought-provoking,
Mhm.
potentially outrageous trade idea based on what we've learned about FlyWire today.
Okay.
What if you shorted the Canadian dollar
Yeah.
and went long on FlyWire?
Whoa, now that's a bold move.
It is.
It's definitely outside the box, but
Yeah,
hey, sometimes that's where the big wins or big losses
Yep.
come from.
exactly.
Let's break it down.
Okay, so remember how we talked about those restrictions on foreign students in Canada?
Uh-huh.
If Canada keeps going down that road,
Yeah.
their dollar could weaken.
Okay.
Meanwhile, FlyWire, with its global reach and diverse revenue streams,
Right.
might just shrug it off and come out even stronger.
It's a contrarian play for sure.
It is.
It hinges on Canada's policy decisions.
Right.
And FlyWire's ability to capitalize on opportunities elsewhere.
Exactly.
Yeah.
I'm not saying this is a guaranteed win.
Right.
It's highly speculative.
Yeah.
And definitely comes with risks.
For sure.
Do your own research, folks, and don't come crying to us if it backfires.
Exactly.
But it is an interesting concept to chew on.
It really highlights how interconnected global markets are.
Yeah.
And how macro trends can create some unique investment opportunities.
So there you have it.
Yeah.
A potentially outrageous,
Uh-huh.
yet plausible trade idea, inspired by FlyWire's Q3 2024 earnings call.
Before we wrap up,
Yeah.
let's kind of zoom out and give our listeners some key takeaways.
Okay.
What should they be watching closely when it comes to FlyWire?
Definitely keep an eye on those international education markets.
Right.
Canada and Australia are throwing some punches.
Yeah.
But FlyWire seems to be dodging them pretty well so far.
They are.
Their ability to diversify geographically will be crucial for them to weather this storm.
Absolutely.
Another thing to watch is their acquisition strategy.
Uh-huh.
They've shown that you can integrate companies effectively
Yeah.
and use those acquisitions to fuel growth.
Right.
So it'll be interesting to see what they target next.
And, of course, we'll all be watching their progress toward achieving that sustained GAAP net income profitability.
Right.
Hitting that milestone would really demonstrate their financial strength and their ability to consistently generate earnings.
All in all, FlyWire is firing on all cylinders right now.
Yeah.
They're a global leader in payments with a strong track record of innovation and growth. Their focus on specific industries, their commitment to efficiency,
Right.
and their disciplined approach to investing their capital all point to a bright future.
It does.
Well, that wraps up our deep dive into FlyWire's Q3 2024 earnings call.
It does.
Hopefully this analysis has given you some valuable insights to help you make informed decisions.
Yes.
Remember, this is not financial advice.
Of course.
Always do your own research before investing.
Absolutely.
Thanks for listening.
Yeah.
And be sure to tune in next time for another deep dive into the world of earnings calls.
Until then, happy investing.